Here's what Dan Ives has to say about a brand new bull market.
System that I've candidly ever seen them.
Dan, I see you nodding your head. We saw cloud revenue climb 28% for Alphabet. Your thoughts?
I think this is an inflection point in that story. I think when you look at cloud, for many years, no one really took them seriously. And now they have a seat at the big table. And I think you look at Jazzy and Amazon, they're watching these, and he sees what's happened with the Crosstown 206 rival Nadella gaining more and more share. You got Alphabet gaining share. And I believe this is a fourth industrial revolution playing out. And you look at AI, this is a gold rush. This is, in my opinion, it's a 1995 moment, unlike anything we've seen since the internet in 1995. And you look at where Google sits, you look where Microsoft sits, they sit at the top of the mountain. Amazon right now, they're back against the wall a little when it comes to cloud. Sure. I think you started to see with Arvind and IBM. I think you'll see with McDermott ServiceNow. I think ultimately it's software. It's going to lead the rally, in my opinion, software and chips. This is a golden age for software in terms of what we've seen with the second, third, fourth derivative. Also add cybersecurity in there as well. That's why you look at NVIDIA and Microsoft. Now look at the second, third, fourth derivatives. I think you're going to see that the next few weeks in terms of earnings. And in my opinion, that's why there's a bright green light to own tech. I'm not saying that there's not the losers on the other side of this. Snap's a good example. Dog ate the homework, blame the weather, whatever the excuse. But ultimately, the winners, I believe this is really, in my opinion, the start of a new tech bull market.
Holy moly, investors, we need to talk urgently. Microsoft and Google just reported earnings. These are your trillion-dollar companies, and this was one of the biggest potential negative catalysts that could have happened, and results are mixed. What kind of implications does this have for the broader markets? How could this affect Tesla, especially heading into tomorrow, where Tesla's going to have potentially the biggest catalyst since earnings, and that is Fed Jerome Powell. We have everything you need to know and much more. Hit the like button and subscribe to the channel only if you want to make more money, you want to reach financial freedom as quickly as possible, or at the very least, stay up to date with everything happening every single day in our markets, as well as with Tesla stock. After all, Tesla is not the only loser in this earnings season. So far, there has been many, and Microsoft just adds to the list. Microsoft stock is down 4% currently in after hours after giving us pretty bad guidance. In the grand scope of things, it's not all too bad. Azure growth is expected to be in between 25 and 26% in constant currency in the fiscal first quarter. The growth that we've seen on Azure this last quarter that we just got numbers for was 26%. So they're actually giving us a little bit of a guide down. Considering Microsoft stock is up 46% year to date, well, you needed to see some upbeat guidance. And this is raising a lot of questions to AI. When is AI really going to make a difference to Azure, to Microsoft's bottom line earnings? That's why Microsoft is down 4% in after hours. But to the contrary, we have a winner in big tech land, and that is Google. Google stock is up 6% in the after hours after giving us better than expected guidance and beating across all segments. Even the lackluster segments from previous earnings, like YouTube, what you are watching this video on, beat expectations, and justifiably so. The stock is going higher. Unfortunately, Microsoft is a much larger name than Google by over $1 trillion. This is causing a sell-off in the S&P 500 as well as the NASDAQ in after hours. But companies specific to Tesla, tomorrow's catalyst with Fed Jerome Powell is going to be very important. And Tesla stands to be one of the biggest gainers or biggest losers depending on what Fed Jerome Powell gives us. And let me tell you right now, he's coming in hot and heavy, guns a-blazing. Fed Powell's interest rate decision comes out at 2 p.m. Eastern Standard Time, and then the big catalyst, the fireworks, will go off at 2:30 p.m., and this has even bigger implications for Tesla stock. Let me break down exactly why this is important, and it's really quite simple. The higher interest rates go, and are forecasted to go, the affordability for Teslas or financing anything falls. And that's a big reason Elon said on the earnings call that they may need to cut prices later in the year. Even though they're cutting prices, it's still more expensive on that monthly payment for buyers. And that's a big problem. It makes car affordability, well, a lot worse. And it hurts demand. It hurts Tesla's business. The cheaper your monthly payment is, the better off Tesla will do. So it has a direct correlation in that sense to Tesla, but also in a more psychological kind of terminology here. Investors want growth, but they also want fast growing growth. They want companies that are stable and they're not going to go bankrupt. Tesla fits that bill perfectly. It's a pretty stable business. It's going to do over $100 billion in revenue this year, but it's also growing at a rate that is unrivaled by other big tech names. Tesla is smashing the competition figuratively and literally. Just in, Tesla now outsells Toyota in California for the first time in history. Last quarter, Tesla delivered 69,212 EVs in California, and Toyota delivered 67,482 vehicles total in California. This is a pretty big milestone considering Toyota has always been the cream of the crop over in California. Tesla's record performance is helping push battery electric vehicle BEV market share to a record 21%. Remember that high school crush or maybe even college crush that you tried to woo over? Well, this is happening on a much larger scale in 2023. Indonesia is trying to woo over Tesla to possibly invest in the country to get a friends with benefits kind of relationship going. Indonesia is set to provide these incentives that would encourage Tesla to invest in Indonesia as the country continues its campaign to attract the world's leading automaker. These discussions have been ongoing since 2020, but earlier this year, developments became more serious as the company offered its rich nickel reserves to help support battery production. In January, Bloomberg reported Tesla was nearing the agreement of terms with Indonesia to build a 1 million unit annual vehicle production plant. Investment Minister Bali Ladalia said the country was also in contact with Tesla and a potential deal was on the horizon. Indonesia says, quote, "Tomorrow we are going to finalize incentives we are going to give to any EV investment in Indonesia." Tesla also is planning a delivery and service facility in Greater Vancouver to handle US and China shipments. Apparently, this electrical vehicle giant, which is Tesla, expects to move 3/4 of cars imported to the region through this site. Let's now talk about Fed Jerome Powell and what this could do for Tesla as well as the broader markets. As I mentioned previously in other videos, your earnings were the big catalyst that would really send the markets down at this point. Fed Jerome Powell is a much more bullish catalyst, in my personal opinion, than a bearish catalyst. This is simply due to the fact that interest rates are very high and inflation has been falling. Inflation has not quite been conquered, but it's pretty well on its way to being conquered. This means I really don't expect too many bearish things being said from Fed Jerome Powell. Of course, he's going to leave the door open for more rate hikes. He's going to talk pretty cautiously about inflation. He's going to say the job's not over. These are things the markets expect. After all, if I'm telling you this is what Fed Jerome Powell is going to say, you better believe that's what the markets expect Fed Jerome Powell to say. As far as how the markets actually react, do we get a big up move, a big down move? It comes down to really one big thing, one big question markets have. What's the language around a pause sound like? Does it sound like a pause where they're going to raise rates again? Or does this sound like a long-term pause? What this will do is create a little bit more guidance for what the markets can expect for interest rates and the Fed. If we expect interest rates to stay paused for a while, as long as inflation continues to go down, markets will get a better understanding of when we could get the first rate cut. And that could be a big benefit to our markets, especially your small mid-cap stocks and stocks such as Tesla that are overall pretty stable businesses that have massive growth potential, and especially companies that are growing a lot. That's going to be a big key, because as interest rates start to fall in 2024, hopefully, as long as inflation continues to fall, that means investors can buy that long duration growth stock with a lot more confidence that it will do well throughout the rest of this year into 2024. Specifically with Tesla, 90% of Tesla's business is revolved around interest rates. So it's pretty simple. Interest rates falling, good for Tesla. Interest rates staying higher for longer, bad for Tesla. That's the simplest third grade way I could say it. And what we have seen from Fed Jerome Powell in the past is really not taking that initiative to be overly aggressive and overly hawkish. He's done what he had to do to keep inflation expectations at bay, but when I really think about it, Fed Jerome Powell cares about his legacy. He was late to inflation. They let inflation to some degree get out of control. Obviously, it wasn't all to do with the Fed. Obviously, some of it was the government as well, and probably a vast majority of it. But at this point, there's real deflationary effects that are out there in the economy. One notable one is student loan repayments that are on average going to suck about $400 a month out of a vast majority of the population in America starting in 2 months. This is a big deflationary pressure, and I think will help do the Fed's job. Option buyers in Tesla stock seem to agree today. The positive order value was 53%, pretty neutral, but overall kind of positive. 658 orders totaling $119 million. The dollars keep flowing in Tesla. And over the past week, your positive order value in the options was 62%, with 6,500 orders totaling $2.45 billion. This is not retail. So retail is much more bullish than this. This is your hedge fund and institutional money. And that's why I like to look at this specifically on Ortex, and that is the interesting flow sentiment. These are large institutional trades that can give you a sense of how these big money investors are feeling. And over the past week, it's been quite bullish. There is also that chance that the markets don't care about Google earnings. They focus on Microsoft's lackluster guidance and find the negative of what Fed Jerome Powell says tomorrow in the market sell off. Odds are, in my opinion, that's not going to be the case, and this is probably a catalyst and a reason to see an upward move. Just think about it in layman's terms. Tesla. This was Tesla during low interest rates. Tesla hit a high of $414.50 per share. Just look at the progress you have seen since 2021. Tesla delivered less than 1 million vehicles in 2021. Now, you're going to be at almost 2 million vehicles. Deliveries are up about 50% since 2021 when Tesla hit all-time highs. Even if this doesn't push you to all-time highs, shouldn't it be some form of a benefit once we're at the end of the rate hike cycle and we can start to expect interest rates to fall? Shouldn't that benefit Tesla? That's the simplest question you should ask yourself. And I think it is quite simple. And the quite simple answer is yes. So that's what I'm expecting. Obviously, I could be wrong and markets could tank tomorrow. Microsoft still down almost 4% in after hours, about 3.5%. So it's still not the best outcome you could have expected, but it's not an earnings apocalypse like it could have been. So odds are Fed Jerome Powell tomorrow is going to give specific stocks like Tesla room to go higher from here, and justifiably so they should. But some of your other big tech names, your Microsofts, your Apples, your big tech names that have done well in 2023 that don't offer that growth investors want to see as interest rates go down, those could be stocks that could see outflows. So it also wouldn't surprise me if the broader markets are red tomorrow, but Tesla and these specific sector stocks, again, think housing, think auto, think Anything that has to do with credit or financing, credit card companies, those could be big winners. That's kind of what I'm expecting for tomorrow after Fed Jerome Powell. Fed Jerome Powell is at 2:30 p.m., so a lot of this move probably going to come the next day on Thursday. So that is going to do it for this video. Let me know down below in the comment section, what do you guys think about Fed Jerome Powell, and where do you think Tesla stock is going over the next couple of weeks based on this new information, Apple and Google earnings, as well as Powell tomorrow. Hit the like button and subscribe to the channel if you made it to the end of this video and you want to stay up to date with any other videos that do come out that hopefully help you make money. If you guys also want to come trade with me live in real time every single day, link down below in the description of this video. But most importantly, enjoy the rest of your day, and I will see you in the next one.